Hey guys, it's FX with Black Flag Trading. Happy New Year to everybody. First of all, it's January 7th, 2019. It's about 1:30 in the morning. So I've had a lot of requests lately, and I've been extremely busy with the business and trading and everything else, obviously during the holidays. So I apologize for no new videos, but I want to go over the current situation in the stock markets real quick. I've had a lot of requests from both my members as well as just followers on social media, and I think it's an interesting time to go over this and see if this is indeed the crash that I've been talking about for the last year and a half. So there's a pic that I sent out to my subscribers on December 10th, and this is literally the pic that I sent out, and I said, basically I pointed out that if we break this short-term trend line on the Dow, at the time was at 24,300, that we're probably going down to about 21,500, and that's the short-term target. Okay, so let's go back to the live charts and see what happened. It was pretty much textbook, and we came down to 21.7, so 200 points shy of where I was thinking, but we're still gonna go down. I promise you, short term at least, we're still gonna go down. I think this is a dead cat bounce on the Dow Jones, and very likely, in my opinion, we're probably gonna get somewhere in this range, okay, to then drop again, and I think it's gonna drop pretty violently again, much like it did during Christmas. Guys, most people do not realize, but we're down about 20%, guys, in just about a month and a half. I've been talking about this. Now we'll see whether this is the crash or not, the big one or not, but what I'm saying is, if this is just the beginning, man, we might be in for some hard times in the economy. Okay, not in trading. I think this is great for trading. There's a lot to be made here, as I have this last couple of months, short in E-minis and some major stocks. But my point is, short term, guys, we are most likely going to be doing that, and then look, we got to get down to this. Let me zoom out. We got to go down towards this outer trend line. Okay, so first of all, why did I say if the trend line breaks? Well, you know that very well. I mean, it's the very first thing that I do. Inner trend lines, okay, outer trend lines, and then long term. So the inner was about to break, essentially, at the time when I put this out, and sure enough it did. Well, the rule is very simple. Once that breaks, typically, okay, I mean, you want to keep track of support and resistance levels, but in this case we're in uncharted territory because these are new highs, all-time highs. So the only thing you can do is draw your fibs from the last AB swing, and the 38 was hit. Sure enough, it's pulling back now. Okay, the next one is simply the 50 and the 618, and I think we're gonna go most likely, at the very least, to test this 20,000 level, which is basically at the bounce of this trend line from 2009. Okay, so this is the main one that needs to be broken for us to see that massive crash that I think has a very high possibility of happening within the next year or so. I don't know, we'll see what happens, but guys, if we break this is the main one. Okay, this one is gone. This one is essentially gone. You can leave it on there, because what you can do with it is you can retest the back side of it for then something like this. Okay, so you can leave this one that just got broken on there. Okay, but essentially it served its purpose. It broke, we went south, sure enough. So where are we going next? In my opinion, we are, forget this rally, forget this bullshit rally this last week, guys. I'm telling you, this is pure just profit taking, manipulation. This is nothing. We're still gonna go down, okay? In my opinion, I could be wrong, but in my opinion, we're going down, and most likely because we're in such a steep short-term downtrend. I mean, it's just nothing about this price action tells me that, yeah, short-term we broke, of course. And what does it do? What do I always say? It breaks, comes back to the backside, but it's still a pullback. It's just a pullback within an overall downtrend. So the next leg, I say at around 24,000 to 25, I don't know, somewhere around this level, 24 to 26,000, 25,000, 24 to 25,000, somewhere here. I said we go back down, and guys, 20,000 is very, very at this point possible. Okay, so if you look across the board, and I talked about the Apple count completing to, and look exactly what happened. Look what happened to Apple right at that 5th wave count. Look at Amazon. I mean, guys, I don't think you realize, but a lot of the stock, look at that, from 2,000 to, holy shit, 1,300 bucks, guys, almost 40%, 30-some percent in a matter of a month and a half. And Amazon has, oh God, I mean, if you go to the monthly, look at the detachment from the 200 and 100 moving average. We're at 750, 800 just to the 618 of the all-time leg AB to come down to C. I mean, there is room for fucking disaster, guys. So let me give you my overall midterm to long-term assessment, and then we'll go towards some picks. Okay, I'm gonna give you some free picks as well as to how I would play this. So before I do this, to put this into context, because those of you who know me and who are members and follow me, listen, your job as a trader and investor is to, you've got to predict, you've got to be able to try at least to predict what's going to happen in the next 6 months to a year to 2 years. Okay, that is your job. Not necessarily that you'll play it accordingly right away, but it's your job to prepare, because once the opportunity then comes and presents itself, you can make a shitload of money in the market, okay, if you're preparing for it. So with that said, let me just play you a very, very short clip, okay, just a little piece from this video that I put out in April of 2017, guys. And I can't believe that's already a year and a half ago. Time flies. But this is one of my first videos when I started the channel, okay, about the Dow Jones crashing. So I was essentially saying that the Dow Jones was at 20,000 at the time where I put the video out, and I was saying that we'll get to about 23,000 points, and I would expect a roughly 40 to 50% crash, okay. And I also hinted the possible reasons for it. Just hear this out. It's just 1 minute, and then we'll go back to the live chart, okay? Very precise targets, but I'll say at least at this 50% retracement of the new leg at 14,000. So basically at 2007 levels. Seriously, I mean, there's honestly room for that. So we're talking a 10,000 point potential crash in the Dow. Okay. Like I said, I don't know what the catalyst will be. If it's going to be Trump or you know, if it's not geopolitical, if it's fundamentally with the economy, which I don't really foresee at the moment. But the only thing that could do it is the realization that we're in a shitload of debt, both on the private sector and government-wise, federal debt. So maybe that will finally kick in and just kind of remind people where things really are. And I don't know, something will happen. But I'm telling you, I promise you, 22,500 and 23,000, okay, I'd have to see certain things, like I said, before I'm officially short on it. But I can almost guarantee you, I've seen this just too many times. A perfect setup like this. Okay. All right. So I think that's good enough to kind of illustrate the point. And that was a year and a half ago, guys. And what I said in that video was this, was that I expected somewhere around the 23,000 level. Now, yes, it blew through that. The 23 is right here, essentially right here. So it blew through that level, but that's what happens in a market melt up. Okay, if you don't agree with that, then let me just show you this, and you'll get a picture for what I'm talking about. That's what a market melt up looks like. Okay, at the last phase. All right, guys, on Bitcoin. So it happens in stocks as well, absolutely. But I was pretty damn close, because in a 10-year bull rally like this, guys, I mean, yeah, I was off about 3,000 points, but when the market has gone up from 6,500 to 26,000, 2,000-3,000 points is not that bad of a gap. Okay, it's not a bad miss. What matters was the timing. In April of 2017, which was about right here, okay, at 20,000 Dow, I said that we're going to probably go to 23,000 and have a pretty decent crash, assuming we have the volatility. And I said it should be end of this year, meaning 2017. Sure enough, 17 passed, but look, literally 1st of January of 18, okay, we had that. So it was pretty damn close on timing as well. Okay, and then this entire year, basically, the entire last year, 2018, I can't believe 2018 is last year already, but all it did was it just formed a double top. It's just basically tried to fight, and it was that essentially that disbelief phase where investors were like, oh God, come on, we gotta buy this dip. I mean, with this kind of market, well, guys, that's what happens. I mean, you buy the dip long enough and that's what happens. Okay, so it took about a year. Now the thing is this, what did I say as to the cause? I said I don't know if it's going to be Trump or if it's the overall economy and debt and everything else. Well, look, the debt has always been there and has only gotten worse. So I'm not going to, so that's true in a way, but that's not the reason. The market always looks for a scapegoat, and in this case, I mean, guys, I got lucky maybe, but I got this one as well, because I can promise you, okay, I followed the commentary out there. I know what Wall Street looks at. Trump's tariffs on China is almost entirely responsible for this fucking crash this last month and a half. Okay, in and of itself. Not that there's no other reasons for the market to pull back. There are plenty outside of Trump. Okay, but the market always looks for a culprit. The market always looks for a justification. And that's always a twist, of course. That's a bullshit, because Wall Street, look, they've made their billions this last 10 years. Hundreds of billions, if not trillions of dollars in derivatives. The money has been made. It's just time to fucking bring it back down a little bit. It's time to take our profits. So that's the real reason. But the twist, the spin that they give the public is, of course, the China trade war, and terrorism here, and bad weather there, and bullshit and this and that, right? Guys, you just gotta know how to read through this. And that's how I was able to tell back then that we're approaching a pretty strong level at which we should come back. Now, again, we're still in an uptrend. The major line that has to be broken for us to truly have that colossal crash, which will take us, I have no doubt, to 2007 levels at 14,000 Dow, okay, under Bush, right before the financial crisis. It'll take us at least to that, if not to the 786 of this last leg. Okay, so this could happen too, guys. I'm telling you, This could happen, but this line, this trend line, has to be broken first. Okay, unless this one's broken, believe it or not, and I hate to say it, but we are still essentially in an uptrend. So the first one broke, which is how I predicted this last crash, this last month. But that's, I mean, that's nothing compared to what I'm really expecting. Okay, nothing. So in my opinion, the line, the major level we should look for is this upward trend line. Okay, so short term, I think we hit about 20,000 in the Dow, and then we'll have to see. I think it's gonna bounce, go a little sideways. We'll have to see. Okay, so some good ways to play this, and I've been already in, of course. But so gold, I also put this one out on my Facebook and to my subscribers as well. This was I don't know, first week of December sometime. I forgot the day, but I said that we're probably gonna hit 1280 on gold before the end of the year. Okay. Let me go back to the chart and time frame. It did almost exactly what I expected there. Okay, this one I put out the call right here. Second week of December. So it hit 1280 literally on the 26th, right after Christmas. So right before the end of the year. So this have been some decent plays. Silver is up pretty heavy as well. Okay, you can see bottoming out. As far as stocks go, I really love, and I mean, I've been loading up on this for quite a while now, and it's carving out this bottom. I put this out early December at 5. We're at 620 already. That's Silver Majestic. It's one of the best stocks out there. It's just been manipulated down with this recent crash in commodities. That's all. But it also gives us an unbelievable entry, in my opinion. Long term on this, by long term meaning 2 to 5 years from now, 23 at least, in my opinion, on Majestic Silver. I mean, it ran up, guys, just 2 years ago. It went up from 250 to 19 bucks. It just in that small time frame when silver bottomed in 2015, right here. This little move in silver caused this stock to go up 8 times basically. Anyway, so Silver Majestic, and I really love this setup on this one. This is Northern Dynasty. NAK is a symbol. The upside on this is just gigantic, because after a bottom information, typically we're at least bound, long term, at least bound to hit the 38%, which is at 8. We're at 66 cents, guys. But short term, what this is forming, which is coinciding, I mean, perfectly with the current scenario, because guys, fear is starting to come in, and I've been telling you for about a year that gold and silver are gonna benefit greatly. What I love about this one, this has formed a just a textbook Gartley. Okay, with a target at least 127 will be 450, but I say honestly on volume, if silver keeps going up and gold, I say from 66, which is currently 450 to 550 on this setup, and it could happen quick. I mean, if panic keeps coming in the markets, gold and silver, just on the safe haven factor, guys, are gonna benefit. Okay, so AG, NAK are some good picks. On the short side, you wanna, of course, if you play E-minis, I just told you, Dow Jones, I said we come up. I said we come up to about this level, at 24 to 25,000, and then we shoot back down again. And guys, on a move like this, from 25,000 to 20,000, which is where I think we're headed short term, I mean, what you can make with just a few contracts on the Dow Jones, on the indexes, is unbelievable. Okay, I'll let you figure that out because it's too complicated to explain it to you, but I do trade the indexes through E-minis myself. But what you can also do, pick some stocks. I think Amazon could be a good short, okay, from this level. We can go to 1260 and then possibly eventually to 1050. But your key is this: as long as this trend line is not broken, I think this is a great short on Apple. I'm sorry, on Amazon right now at about 1600 bucks. 1600 bucks. Okay. Another one that I was looking at, Aflac is topping out and forming, I think, a very nice head and shoulders. So I think that could be a decent short with the Fibonacci D extension for this at a minimum at 39. Okay, it doesn't seem like much, but for those of you a little more advanced, you know what you can do with some puts or by selling some calls on this. Okay, going short. Essentially, we are forming a oops, sorry, my bad. Okay, not textbook, but it's essentially what we're doing. We are topping out through head and shoulders, and our ABC bounce has occurred, has been pretty much confirmed in my opinion at the 618. Yeah, we're going down on Aflac as well. So another, I'll give you another one. I'll give you another one that I just bought myself. It's yeah, I know you don't want to buy. It's kind of counterintuitive, but this is a pot stock. I mean, it's come down to a pretty damn good level. The first swing was perfect. I mean, just an extended Fibonacci target is a 2.61 or the 4.23. Okay, so that's what it does in these massive rallies. And now, where are we? Well, we've come down to a perfect 786. Excuse me. There's a pot stock again. ALEAF is the over the counter, but ALEF is the one on the Nasdaq. It's the same stock essentially. One is in Canadian dollars, one is in US dollars. Whatever, it doesn't matter. Same exact setup. Okay, doesn't matter. Whatever you want. Let's look at the one on the US exchange. Doesn't matter. So ALEF. There's a pick that I went out to my subscribers as well. We're at a perfect territory. It's already up by 10 cents, but I think this anywhere between 90 to 125 is a good buy, to at least 250, but possibly much higher. And I know, again, look, it's counterintuitive as far as, you know, we don't want to buy stocks typically unless they're gold stocks or silver stocks during a market crash like this. But these are early phase pot stocks, and honestly, I think they're not really gonna care. Again, guys, so this is how you want to interpret long-term, short-term, and mid-term setups. Okay, everything has to be within the context of the major trend, and without a doubt, we have been on a massive fucking AB financial crisis CD leg. This is why I thought the 23,000 would be the level, because it was the 1618 extension, okay, of this leg from 2009 bottom. Okay, sure, okay, it passed through that a little bit. I mean, not a little bit, but here, let me draw this out the way I'm supposed to, right here. So this was the D extension. Okay, I hope you see what I'm doing. It's very easy. There's almost a 40-year setup that worked perfect. The target would have been at 23. That's why I had that That's why I put the video out about a year and a half ago. And sure enough, it came there, but it went through it. Okay, that's fine. That's fine. That was a Trump bump. Okay, it's hard to predict exactly to the exact point, but the point is this: we are getting that crash now. It's very early to say whether it's going to be the big one or not. And how do we know that? You're gonna know that. You're gonna draw this trend line from 2009 low, connecting the higher highs. Okay, if we break below this upward trend line, guys, I'm just gonna tell you, watch out. Okay, because 17, 14 are gonna be very quick, but honestly, a 786 pullback is possible. It's possible, and that will put us at 10,500. Guys, it's possible. It'll be an unbelievable opportunity there, because then that's where we're gonna go in the next 10 years. Okay, I promise you, 10 to 20 years. So it'll be like buying Apple back in 2008, right here. Okay, after the financial crisis, we'll have that type of opportunity, in my opinion. Or Amazon could literally drop under that type of scenario. Amazon could be, I mean, it could come $500 or below. $500 or below, and God, would that be a buy? That would be an unbelievable buy, because I mean, the company's there. Okay, it's not going nowhere. I promise. It's only gonna get better. The technology is there. The concept is great. It's just time for a excuse me, for a reevaluation. They're just fucking going up too much. That's it. It's time for the big boys to cash out. Here's what happens every cycle: cash out, take everybody out. They're gonna sell it through futures. Okay, taking even more people's money, and then they're gonna buy back at the bottom. Okay, just like they did with the financial crisis with the Dow, right here. When everybody thought the world was ending, that's when the smart money got in, guys. And you missed that ride. I've been long for 10 years. I've been long this market for 10 years. But I've been out of stocks for the most part for the last year or so. Okay, and been heavily invested in cryptocurrencies and gold, silver, and the corresponding stocks. Okay, so this is what to look out for, guys. If we break this trend line, just be very, very, very careful, because it's gonna impact not just stock markets. Stock markets will be the least of the problems. If this line breaks, we are looking at a major recession, and most likely much bigger than the one in 2008, because debt has only gotten worse. Okay, if debt did it back then, debt has quintupled since. Okay, has gone up fivefold, both private and public. So something big is going to happen if we get that massive crash. Something major, geopolitically speaking, and probably even legislatively speaking, is going to occur in America, and probably worldwide. But so it's very important. It's a very important time, guys. Very important time. Keep your eyes on the market. Trade accordingly. Protect yourself by investing in some gold and silver. In my opinion, you can do whatever you want, but I know silver has not blown up, and gold the way I've expected it. But what amazes me is that it hasn't gone down. It hasn't gone down with this massive rally we've had this last 2 years under Trump in stock markets. I mean, gold should have been below 1,000, guys. Below $1,000 an ounce, and it's held pretty damn steady. So in my opinion, we're coming at a precipice, and I think we're gonna have a massive squeeze. Okay, let me take some of this shit out. A massive squeeze. This is where we're at. Okay, so it has to go now, one way or the other. I don't know. I don't know which way I don't know what's going to happen. Anything can happen, because it's so deeply manipulated by the Fed. This market is very manipulated, but they can only do that so much. Okay, they can only do that for so long. So we're coming at this squeeze, at this wedge, and something is going to happen, either down or up. But my guess is I stick to my original bias. We're going to see crazy gold and silver numbers in the next few years. And if gold does this, gold stocks and silver stocks will just, I mean, it'll be eye-watering results, guys. Eye-watering returns. And right now is the best time to get in, if you're gonna get in the space. You don't have to, but if you're gonna get in, if this space interests you, there's the time to get in. And finally, cryptos. I mean, that I'm gonna leave that for another video. But cryptos, guys, there's three things that's gonna make or break you in the next 5 years. Cryptocurrencies, absolutely first. Gold and silver, and cannabis stocks, guys. It's about to blow up on the pot stocks revolution. I mean, the industry is about to absolutely blow up based on the legislation they're passing nationwide. So that's the only three things, guys. Stock market, I'm sorry, but I wouldn't touch it. And what was the other thing that I told you? Dollar. I'm not buying dollar rallies. I expect it to keep crashing, and I think we're at the top. So anyway, I hope this helps. It's January 7th again, 2019. We'll see you next time. Thank you.